wind and hail ripe area as well. But hail and high wind have been affecting a lot of places, so it's been very interesting. Even Chicago and Illinois just have been taking a pounding this past year, so much so that Allstate, which is headquartered in North Northern Illinois, has said that they're going to increase the premiums. They're going to give them like a 25% rate increase this year. That's practically the same as a hail state. So when we became a hail state about 15 years ago, that was a one-time 50% rate increase. There are things that you can do to lower that, but they were going to get their hit first, which they did. So to offset that, if you have, so what we're going to go over tonight is personal homeowners policies. So if you have your policy or can get to it, go get it, and we'll look at the deck pages, which means declaration page, which is where your premium is found and the amounts, the kind of insurance you have, and it'll say homeowner's policy. It'll have the policy number on it. It'll have your name on it. That's the insured. It'll have your address on it. The insured home address, and it will have whether or not your replacement or actual cash value, and it'll have the amount of insurance on your home and maybe some other things. But there's about 3 pages that are deck pages that are going to be important. There's going to be a lot of other pages, but the declaration pages are the main part of the policy that we're talking about tonight. All right. So if you'll find those, um, and you can always call, and I think we have a number where you can call that and we'll get and ask any questions that you might have, or even set up an appointment or by phone or whatever, and we'll take care of what you need taken care of. All right. So to start with, your zip code is more important than what most people think. So the zip code for personal auto and for homeowners represents, they look at the stats, they look at the data, how many cars have been stolen, how many claims have been filed um, in that zip code. Okay, so that zip code is important. Um, and how many at fault claims that you have isn't going to be important. So there are some policies that will have a forgiveness feature to them, and so that you're going to be forgiven for one at fault claim every 3 years. And an at fault claim is important. If you have very many at fault claims, even one, they're going to give you a rate increase if you don't have that forgiveness feature. If you have 3 at fault claims, then they're going to drop you, most likely. If not before that. Okay. And if we ever get to a hard market is where insurance carriers basically play 52 card pickup. They throw all the policies in the wind, and you have to kind of fight to hang on to what you have. Okay. And if you do have a number of claims, you're going to have to scramble to find coverage. And also, a hard market means the rates are going to go up. And so a hard market doesn't happen very often, about once every 7 years, 9 years, something like that. But you'll know it when there's a hard market. So that's one reason why you want to be ready for that. Make sure you have your policies where you can find them. I would recommend doing a review of your policy with your agent at least once a year, if not more often than that. Okay. And there are several different items that you can meet about. And that doesn't mean you have to buy something new or the rate's got to go up. The rates could go down. As a matter of fact, I just added something to my driver's policy. I did one of those things where they can tell on Life 360 how you're driving, if you're braking hard, if you're speeding, especially more than 80 miles an hour. If you fast start, hard brake, like I said, it will note that and your rates can go up. But I got a discount for doing that, and you can get a discount about 10% and also an upfront refund. So, depending on how you drive, you know how you drive, that might be something to check out. All right. So, on the roof, if your roof is brand new, at least within the last 12 months, you can get a discount. If your roof is a class 3 roof, meaning that it has material in it like recyclable rubber and things, and there's about 5 companies that make these and sell these products here in Oklahoma, so it's not hard to find them or get them to put on your roof. A class 3 roof is for but recyclable rubber, so hail hits it and doesn't tear it up. It has some resilience factor to it and rebounding ability. So the class 3 roof is worth about 10 to 15% discount. Then the class 4 roof is worth, and it's actually a little bit thicker material and have a little bit more heavy duty. And one of the companies that make that product here in Oklahoma, out of western Oklahoma City, is Malarkey, and I think it's off of kind of down by I-40, just before you get out of town, I-40 and Council, something like that. But at class 4 roof, you can get about 20 to 25 or 20 to 35% discount on that. And a roof should last, one of those roofs should last at least 10 years in Oklahoma. With the number of hailstorms that we have and the size of the hail that we have, a lot of roofs do not last very long. But one of the things that insureds, people who have these roofs, have homes with insurance, are thinking is, hey, my roof's about 10 years old, it's 20 years old, I need a new roof. I'm going to wait for a hailstorm, I'm going to get a new roof. The thing the thing about that is, first of all, that is a hefty claim, and now that we're in the wind hail state, they've been slowly introducing higher and higher deductibles. So where your deductible, for most of us, having a $500 deductible is, you have to go back a number of years to remember that. Okay, then for a long time there was a $1,000 and even $1,500 deductible. Now you're really going to find it hard to find anything like that. It's going to be a wind and hail deductible of 1%, 2%, all the way to 5%. Okay, so if that doesn't sound bad, okay, it doesn't sound that bad when you think about, oh, that's just 1%. It's 1% of the replacement cost on your home. So if your home is 100,000, 1% is 1,000, and so forth. So 200, 2,000, 300, 3,000, a million, 10,000. So you can see where are the discounts worthy. So, for example, a wind and hail, a difference between on one of the last ones that I homeowner proposals I did, it was about $800 difference between 1% and 2%. So when you're trying to make sure that you have a mortgage and you have an escrow account and you want to minimally reduce your your mortgage, um, you are going to be looking at things like that. One of the things that can affect your mortgage, first of all, is the interest rate, the amount of the loan, the interest rate on the loan, the insurance cost, okay, and property taxes. And then if there has been a successful claim against your municipality and they spread that pain out amongst all of the property tax payers. So that could be an ugly little surprise too. So a lot of people, and rightfully so, want to reduce their homeowners insurance. So consider, do a little bit of math, and if you can save $800, that means you really, just even if you have a deductible, whatever the deductible is, wind and hail, 2,000, all peril deductible, something like that, whatever your deductible is, um, you need to have that in emergency fund. So not just that, but if you own a home, about 2% a year needs to be set away for repairs, maintenance on the home. So then you offset that by, okay, if I take that $800 in savings and I put that towards the premium, towards the principal payment, do I get ahead that way? So it really depends on where you are in your home buying journey there. But there's a lot to consider and think about. So in this one proposal that I was doing, the person had about $1 million house, and the wind and hail at 1% was $9,200. The 2% was $20,000. So that's a pretty good hit, if that's what you have to pay. Okay, so then you look at, are you going to insure your home at actual cash value or replacement cost? Replacement cost means that, and this is much better when we go to check up on a roof and they have actual or have a replacement cost versus actual cash value, because actual cash value is going to depreciate your home 1% a year on the value um, that you're going in what you're going to have to pay in the deductible. Okay. So if you had $1 million house and it and your house was 10 years old, that's 10%. Okay. So that means what you're going to get from the insurance company is the amount minus 10%. And that is, so if you have a 20-year home, 30-year home, something like that, that's a big hit on that, much less a deductible. Okay. Um, Replacement cost is better. It costs a little bit more, but we highly recommend you consider the replacement cost. Okay. Um, Now you're going to have your home. If your home is valued at 750,000 or more, it's most likely that an inspector is going from the insurance company is going to come to your home, and they're going to inspect not just the outside, but they're going to go through the inside of your home to see if it should be insured at that much, at that amount. Okay. And so they're going to be looking at the cabinets, the flooring, uh, whether or not you have granite or solid surface, countertops, and all those kinds of things. Okay. Um, They're going to be looking also at your roof. I mean, they're going to look at everything. They're going to inspect everything. And they're going to come up with a valuation that they are going to recommend to the carrier and to the underwriters to insure. And they're going to make you an offer as to how much it should be insured for. Okay. Now, the good thing about having an inspector come out and check your stuff out is that is an official visit from the insurance company. So I wouldn't necessarily be afraid of that, because if you do happen to have a claim anytime soon after that visit, they're gonna, obviously they're gonna pay, because, and pay quickly, because they checked everything out. Okay. So I would not be afraid of that. Having somebody just come by and check out the outside of your home, that's not at all unusual. Whether it's the insurance agent taking pictures of the property, or they're going on the county assessor website, or Zillow, or realtor.com, or Redfin, and checking your stuff out. Okay, and there's a lot of pictures of the inside of home that are on there as well. So they're using that data to make sure that what they're locking into for coverage is correct. Okay, then there is such a thing as, you have the deductible, and there can be one thing that's an all perils deductible, meaning that that's what they're going to pay, except for wind and hail. Wind and hail is a separate deductible all its own. Then, if you happen to have other structures on your home, and that starts with the pool, okay? Now, if you have a deck that's attached to the dwelling, that's not another structure, okay? Um, or any kind of overhead decking as well. That's attached to the roof, attached to the house, that's not another structure. If you happen to have another garage, a guest house, a pool house, shop, little shed for your lawnmower or lawn equipment, that kind of thing, that's the other structure. A pool is considered another structure, or other structure officially is what it's called. That's typically a percentage of coverage based on the replacement value that's put on the coverage for the home. So if it's $500,000 of coverage on the home, the dwelling, then 10% or 20% would be a $10,000 benefit for other structures. But typically it's a fairly large amount. It can go up to 50% or so of your coverage on your home. And so in this case, it was for this person I was helping them with, it was 196,000. Okay, so, and those are, again, are things that are not attached. So you can have a garage that's technically not attached, but it has a metal roof or some kind of roof, but no wall between you and the built in the home, the dwelling. So there can be a overhead cover that would not be considered to be attached. If it were attached, if there was a wall there, posts there, and they deemed it to be attached, then your dwelling coverage would have to be more to cover that. But in this case, where it's not attached, the coverage is the same quality of coverage under other structures, but because it's listed like that, it costs less to insure. So it drives the premium down if you had other structure insured. Um, there's water backup. Water can back up, whether it's a sewer line in the bathroom, a sump in the basement or lower level, or water lines backing up. um, it can cause a mess. So that's typically anywhere from 2 to 20% benefit. In this case, it was like $19,000. But the damage can be that if you had a wood floor and that happens and you're not there for a day or two or whatever, that can cause a lot of problem. If it's a concrete floor, that doesn't necessarily cause a problem, but it could soak in to the drywall and the insulation and under the cabinets and that kind of thing, or carpets or rugs, and anything that happens to be sitting on the floor can get messed up. So um, usually you want to have something there for that. Service lines. So if you're in town and there's a water line that runs, that's a municipality water line, and then from that water line, a line goes to your home. That's what we're talking about for a service line. If that line going to your home has a break or splinter or crack or something like that, where they're saying that you have to fix that, that's your responsibility, there's coverage for that. Okay. Then there's coverage for building codes. So if your home is older, and it doesn't even have to be that much older, but if the planning commission for the municipality decides to tighten down on some certain building codes, and you have a problem and you've got to do a rebuild or fix that part of the house, you're going to need money to meet their codes. And those codes can be fairly stringent. On this policy was $97,000 to pay for things that were covered under the building codes. One of those things can be a roof. We had a lot of shake shingle roofs in the past. So they had slats instead of OSB, like solid board that was half inch, 3/4 inch, 1 inch plywood that were like 4x8 sheets on your roof. Those are very, very solid. So they help in insulation, they help in definitely wind and hail. Where the shake were definitely going to be a hazard for the wild kind of wildfires that we've been enduring. They would burn like crazy. Um, and also after that, you get past the wood shake shingles and 2 foot spacing between the slats, there wasn't anything to protect you from what was coming through the roof, beyond the roof. So if you happen to have a homeowner association or the municipality said, hey, we want everybody um, to change to OSB or this plywood board of a certain thickness. And so that meant that you could put it down, or you had to have some other forms of slats to be able to attach the OSB to your roof. And those boards cost a fair amount of money, to do that for a decent sized roof. It was going to cost a lot of money. And so that's where your building code coverage comes in handy. So if you have if so check out and see what kind of roofing product that you have and how that's done. You can go up in your attic or have somebody go up there and kind of check things out for you as well. Um, Usually when you buy it, you have an inspection, and that inspector typically is going to go up there and check those things out. Personal property, that's all your stuff in your home that if you took your home and you were able to lift it up and shake the house, turn it upside down and shake the house, anything that would fall out of that house is personal property. So it's desks, chairs, furniture, clothing, all those kind of things. Okay. So typically you're going to want 50 to 60 or so percent of the value of the home in personal property. In this case, it's $587,000. So you think, well, $587,000, I got a check for that, that'd be really good. But that's not exactly how it works. So you might have coverage for 500,000. Okay. Um, they're going to have you itemize as best you can what you had in there. So what you do is you buy the new bed because your bed's all burned up, right? Your bed, mattress, all that stuff. And then you turn in the receipt for it and they pay you for your purchase. Now, typically, if what you're going to want to do is go take pictures of all your stuff in your house. So, room by room, catalog your things. You can videotape it, take pictures of it, organize your stuff so that you can write out on the claim more easily when your stuff's documented. That way it makes it easier to work with the claims people. Okay. And they're going to look at your stuff as if it's actual cash value. So if they had to, you say, well, I think I have 500,000 worth of stuff. They're going to say, well, how old is your house? They're going to just give you a ballpark number as far as that actual cash value. They're going to say, okay, well, let's say 20% off of that, 50% off of that. And we're going to give you, if we can't come up with a number because you can't document what you had, we're going to give you an actual cash value amount. That's not going to be as good. So so you go buy your stuff, save the receipts, turn the receipts in, and they'll reimburse you 100% of what you paid. Okay. So it's not bad, but it's good to be prepared for whatever eventuality. And so you can make it a lot easier on yourself by just having a videotape or a video of your stuff. Okay. And if you do have receipts for higher dollar stuff, or, documented receipts, keep those somewhere. Okay. Then there's something called additional living expenses, and that can be up to like 40% of what your home value is. And in this case, it was 195,000. So what does that mean? Additional living expenses. That is in the event that you have a total loss or a loss. It doesn't have to be total loss. They're going to pay you to live somewhere until your house is ready to be occupied again. So up to 24 months of payments to you. So 24, if it takes 24 months, typically for a new house, and if it was a big disaster like that big tornado that we had, um, that was out in Midwest City area, 2001, or huge hailstorms, that kind of thing, where a lot of contractors, a lot of buildings and homes were impacted. So to find a builder to do your building for you, to do your home for you, and um, it might take a while for your turn to come up to have that thing replaced. And there are going to be builders and contractors come in from all over the country to help, but that may not be to your satisfaction. So this allows you to live in a hotel, to live in a rental home, um, something like that. And it can be in the same neighborhood, it can be wherever, like kind quality, um, and take care of yourself and your family. All right. There's family liability, and that typically starts at 100,000 to maybe $1 million. Okay. So you have to determine if you have a pool, if you have um, jungle gym, you have kids, and they have friends, and so or your hospitable people, um, you may think about a higher liability. 100,000 is kind of where you start, and a typical amount would be about 300 grand. Okay, so and are if you have a boat, an RV, horses, horse trailer, um, things like that. Um, a lake house, you may very well want to have a personal umbrella. Well, that personal umbrella starts at $1 million limit. And you have to have so much underlying coverage on your homeowner's policy and auto policy to have that umbrella sit down on top of your home and auto policy without a gap. Meaning that if you only had $100,000 home policy liability and they wanted you to have 500,000, well, there's a $400,000 gap. So the first 100,000 of that liability claim is going to get paid by the insurance. You're going to be responsible for the next 400,000, and then the next 500,000 will be on the personal umbrella. So if you want it seamless, you need to meet what the minimum requirement is, and that can be different for different carriers, different companies. And a personal umbrella used to be about $200. Now they're around $300, okay, for a year. But that's a lot of protection, that to have, and depending on if you have a business out of your home and other things that we talked about, you may very well want to do that. Okay. Um, then there's medical payments. Medical payments, it's the same coverage that you have on your home, that you have on your automobile. So typically that starts at $1,000 limit, 3,000, 5,000. I've seen we have some that are $10,000 limit and $25,000 limit. So anybody um, can use that gets hurt on your property. Okay, one of your guests gets hurt. They're they're bouncing up and down out in the backyard, and they come flying off, and they break their arm, and it's $300. They use the med pay, and they have that bill paid for in full. Okay. And then it pays regardless of whether or not you have health insurance. So there's no deductible, there's no nothing on that. It's just from $1 up to whatever the limit is, 10,000, 5,000, something like that. Okay. Um, in a car situation, you have the same benefit. And if you're in somebody else's car, your med pay will pay. If a car comes backs out its driveway and hits you as you're crossing their driveway, and they don't see you and they hit you, your med pay is going to pay. Okay. And their liability insurance is going to pay, but your med pay is going to pay also. Um, so that's a very valuable thing to have. So some people take the 25,000, they do the 25,000, the premium is a bit more, but that's $25,000 in coverage, because some people's copay and deductibles and out of pockets are getting to be very high. So you can kind of factor this type of coverage in for that. Okay. Then there's a number of discounts. There's all kinds of discounts. If you're married, if you pay a full annual through your escrow, that you get it's less. Okay. And then if you do an annual pay, that's a little bit more, okay? Or 6 month in full, okay? Versus the monthly. So you can pay it on a monthly basis, that's gonna be more. You can pay it on 6 months, that's gonna be a little bit less. You can pay for it in a full annual, that's gonna be less. The cheapest is gonna be paying it, premiums paid in full by your escrow account, okay? The escrow account, if you are paying for, you still have mortgage, then the escrow account, beginning at 30 days, if you're at the 30-day mark, they can take the money out of the escrow to pay in full the insurance. Okay. So if you're looking at checking your rates for your coverage and your coverage, you want to do that before, at least 2 months ahead of time, because some will pay 45 days out. Most are going to pay at 30 days out. So it's a good thing to kind of get that ball rolling a little bit early, okay? Because it takes some of these coverages, I mean, they're not, you're going to want to fully understand and kind of make a good decision. It takes a little bit of time to be able to do that, okay? Especially if you're going to look at 2 or 3 coverages side by side, it's going to take a little bit of time for everybody to get their act together on that, okay? Then on also, there are certain coverages that are going to look at animals a little bit differently. So if you have horses, you have dogs, you have chickens, um, that is either going to increase or be neutral as far as claims are concerned. There are some dogs, whether German Shepherds or Rottweilers, things like that, that some companies will not even extend an offer for coverage if you have those kinds of risk running around in your yard. So definitely check that out and ask, because somebody, if you're talking to some agencies, they're not going to declare that. There may be a surcharge for that, but until you ask, you're not going to know that, okay? Now, how much do you insure your home for? Okay, that's, if you had a professional inspector come out and check it out, that'd be one thing. Most people are not going to do that. So in this market here in Oklahoma City and Edmond, it might be a custom home. They're going to look at an economy home, a standard home, above standard home, a custom home, or a 5% home. Which we don't see that often. Okay, so most are going to be above standard, standard to above standard. Okay, so that's where about 60% of the houses lie in those two. So if you're a custom home or above standard, you can go by the custom limit, and that is $180 to $230 a square foot. And you can kind of get a feel for that by going to Zillow, Realtor.com, Redfin, and seeing what they are saying that your home is valued at, and they'll even tell you the dollar per square foot. Okay. Then you can go to the county assessor website. They'll tell you a market value for your home. And them telling you the market value on your home and what they charge you for property tax, you don't want it to be as high as what they're saying, but they'll give you a guesstimate of what your market value is on your home. Okay. You take that and you divide that into the square footage of your home. That'll give you about what the rate per square foot should be. Multiply that times your square footage to come up with the value of your home. And a lot of people are going to be surprised at what that is going to be, because it's many times more than what you thought it would be. Okay. So I did one, and the home was listed at 472,000, which was for 1,419 square feet, $333 a square foot. That's a lot, you know, that's a lot of money. But that's, you know, we go by that. We don't have the ability necessarily to do agreed value. An agreed value limit would be both parties agreed to that, and that's the amount that you're going to get. But when you do replacement cost, there's flex in that amount of many times 20%, meaning that between the time that you bought the insurance and the time that you had the claim in that 1 year, the valuation could be higher. And it's the replacement valuation. It's not what necessarily what you could sell your house for more, but it's what it would take for somebody, a crew to come in and repair or replace the home. So to start from scratch with concrete, a slab or crawl space or a basement, and all the stuff that they got to buy, and insurance on them and all that stuff, the cost can, especially if there's multiple homes around the area being involved, um, you're going to want to have a little bit of flex in that. And that's, and then you get the amount, so you know the amount that you have for insurance, and you're working with your builder, your architect, your crew, and you say, they say, okay, we have this much. What do you want to do? So they're not going to replace your house with exactly necessarily the way that it was. You might have certain rooms bigger, less big, fewer, more bathrooms, whatever. But you have the freedom to decide, um, with the amount that you have, from the claim. Okay. So a class 4 roof is also roofing material. You have class 3, class 4. They can be also called impact resistant, and they're also more technical nomenclature for them is going to be a UL 2218. So that's an underwriter's laboratory nomenclature, underwriting laboratory UL 2218 slash class 4. Okay, so that will be on the invoice, it'll be on the receipt, it'll be on the packaging. And so take pictures of those things, keep a copy of that, because that is valuable. Okay. And it, your roof will then be certified for that. And you will be happy that you made that decision. Okay. The roof is one of the most important parts of the home, because that protects everything from wind and hail, which are and rain, which are the biggest culprits for damage. um, your A fire comes from within typically. A wildfire comes from outside. Those roofs many times are going to be fire resistant, but if a fire does break through your roof, then it's pretty much damaged, not necessarily beyond repair, but very close. So if the fire ever breaches the roof, so you see on TV, so and so had a fire, and you look at video of the fire and the fire's coming out of the roof, the fire damage, the smoke damage to that home and everything in it will be, it'll be very, very close. Even if the house is not completely burned to the ground, it won't matter because the smoke damage will be so much that, and fire damage that it'll have to be replaced. Okay, so if you have any questions whatsoever, please give us a call. And I think there's going to be a number on the screen or a number that you can, on this website that you can go to. And then feel free to contact me as well. And either one of us can meet with you in person, but I'd be happy to talk to you about your home, your autos, um, your roof, all those kind of things, and help get you squared away. Thank you very much for your time.